All right, cool beans. Welcome to the new brother, Mr. Bailey. Welcome, welcome, welcome. So as always, we're gonna start out looking at the dollar. Um, and if you're new, what I want you to do is concentrate on marking your daily candles. I want you to go to your daily time frame and I want you to concentrate on marking the daily high, the daily's low, and I want you to um, put on your Fibonacci retracement tool, and I want you to measure the daily's high or low, depending on what um, what kind of day it was. So if it was a bearish day, you're going to measure from high to low, right? With your Fibonacci retracement tool. And that's how I got these levels here. And for the veteran students, y'all already know that that is the premium array, what we call the PD array. And the P stands for premium and the D stands for discount. So in the case of a seller's market and prices pulling back after we've had a selling market, in that case, the PD array is pulling back up into the premium array, and vice versa. When we're pulling back in a buyer's market, then price is pulling down into a discount array. So that's what I want you to focus on going forward. If you're new, I just want you to focus on marking your daily high and your daily low and those PD arrays. And I will send you the Fibonacci levels for the Fibonacci retracement tool. If you're new, I'll send you those levels that you need to put in your input on your settings. So now that we got that out of the way, going back to Monday night, I told you guys that um, we had ran Friday's sell side liquidity, which would be this low here from Friday's daily candle. We ran that Monday. So I told you guys for Tuesday we was gonna be looking for one or two things. We was either gonna be looking for price to run Monday's sell side liquidity, wherever that sell side liquidity was set at, or we was gonna be looking for price to pull back up into the premium array of Monday's daily candle. And I told you guys if we did run Monday's sell side liquidity and we closed below it, that I would be expecting for the algorithm to deliver price down into this fair value gap that we have right here. And so you can see yesterday, price was very stagnant yesterday, even though we had high impact news to come out yesterday. We seen price didn't push up into our premium array. However, it did push back up into Friday's sell side liquidity with that news that came out 8:30 yesterday. But we did not run Monday's sell side liquidity. And I don't know how many of you guys paid attention to this, but if you look at yesterday's daily candle, if you look at the opening and closing of yesterday's daily candle, you'll see that yesterday's price opened and closed in the same exact place. So it opened at 103.673 and it closed at 103.673. 0.67. So um, that's just something to note. Usually when you see candles like this, retail traders are taught that this indicates a reversal. Sometimes it does, a lot of times it doesn't. You guys know we don't trade off of patterns, we trade off of technical science, strictly price action and market structure. Um, more algorithmic trading is what we do. So looking at yesterday's candle, we see price failed to run Monday's sell side liquidity. Um, so when price opened up today, we see that price came down, ran Sunday's liquidity, sell side liquidity, and quickly pushed up to run through Monday's premium array, and we came back up into Friday's premium array, which we wanted to see was we going to get Monday. We wanted to see was price going to pull back up into Friday's premium array Monday, but as you can see, we didn't. Instead, price was delivered to sell side liquidity, and we got that push up into Friday's premium array today. So that's why patience, it pays to have patience in this game, because um, the algorithm is going to deliver price on its own time. So only thing we can do is monitor price and look for the indicators that the algorithm gives us. So with that being said, um, today, once we seen that sell side liquidity ran, we go down to the hour time frame. We see that sell side um, liquidity ran in sorry, lost my train of thought, guys. But yeah, we see that sell side liquidity ran right here yesterday from Monday. If you look right here, go back. So here's Monday sell side liquidity on Monday's daily candle, right? And then we go down to the hour time frame, and we see that sell side liquidity ran right here. Um, it was set right here, and it was ran right here. And then we see what we'll do. This is for the veteran students. You know what I look for when we see our market maker buyer model start to form. We look for a run of sell side liquidity. We look for a lower low to form, which is that turtle soup. Then we look for a break of market structure, which we see that break of market structure right here in this candle. That break of this market structure right here, which retail traders, Brother Bailey, you probably will refer to that as consolidation. That's what retail traders are taught, that that is called consolidation, but we call it accumulation or market structure. So once we see that low, that high, that lower low, we see that sell side liquidity taken out right here, right? And we see that market structure break right there. We look for a fair value gap, preferably a breakaway fair value gap, meaning a fair value gap was created. And a fair value gap Brother Bailey, is what you see me identifying that I'm marking up right now. Um, Anytime you see a gap in price action and it's an imbalance in that gap, meaning it's just one swift move, and it's so when we see buying right here, but we don't see selling right here, and we don't see a candle come back down into the gap between this candle's high and this candle's low, and it's a gap in between there, and there's no selling on that side of the candle, that is what we call a fair value gap. And same thing vice versa when it's a down movement. When you see a gap in between the low of this candle and the high of that candle, that is what we call a fair value gap. So once we see that sell side liquidity taken out, and we see the break of the market structure with this move here, we then look for our fair value gap, preferably a breakaway fair value gap. So a breakaway fair value gap is when the fair value gap occurs and we don't see a candle pull back down into that fair value gap like we see it happen. Where can I example? Okay, like so, it, so this would be a regular fair value gap because here we see a candle came back down and pulled down inside of that fair value gap. So that is a regular fair value gap. This is a breakaway fair value gap. That's when we don't see a candle pull back down inside of that fair value gap. Breakaway fair value gaps are very, they're very bullish. A breakaway fair value gap sounds exactly what the name says. It's a breakaway. It's going to cause price action to break away from it because you're not seeing any willingness to pull back down inside of that fair value gap as opposed to how you seen the willingness to pull back down inside of it here. So this would be your regular fair value gap, and this would be a breakaway fair value gap. So preferably what we want to see after the break of market structure is a breakaway fair value gap, simply because it's more bullish and it's a higher probability trade than just a regular fair value gap, if that makes sense. So this morning, once we seen that market structure break and we seen that breakaway fair value gap form right here, once we seen this candle close and that breakaway fair value gap was formed, we pretty much know that the algorithm is going to deliver price up into this new week opening gap and up into Friday's premium array that we was waiting for price to pull back up into Monday, but it took us until today to get there. And these are all of the indicators and the confluences that we needed to see to be sure that the algorithm was delivering price up into that premium array. Does that make sense, everybody? Drop a 1 in the chat if that makes sense. All right, cool beans. So now, with that being said, and the algorithm delivers the price very simply, in rhythm. So I told you guys if we broke below Monday's sell side liquidity, that I wanted to see the algorithm deliver price down into this daily fair value gap that we see right here. But we see price didn't do that. So that was an indicator that price was going to more than likely um, be delivered back up to and through, but not to be sure that it was going to deliver it through, but was highly probable that it was going to at least deliver price back up into the premium array of Monday's candle once we seen Tuesday's price action did not run Monday's sell side liquidity. And so um, not just run Monday sell side liquidity, but run sell side liquidity and close below it aggressively. And we did not see that. So that was an indicator that we was going to at least see price pull back up into Monday's premium range. So had we seen price close below sell side liquidity aggressively, then we would have been booking for price to come down into this daily fair value gap right here from February the 3rd. So now that we see that we did get our confluences down on our lower time frame and we got price to come back up into Monday's premium array, the Nui opening gap into Friday's premium array. Now, what I want to see is very simple. I want to see how price reacts to this Nui opening gap that we just pushed through, right? I want to see if price. So we go down to the daily time frame. I'm not really concerned with what price does to this Nui opening gap as far as respecting it as a support, right? To be interested in taking any buys. I won't be taking any buys off of this level because we could very well see price action push through back down through this new reopening gap because you got to pay attention. We got a fair value gap here. We got a fair value gap there. And we got this fair value gap here. So we have all this imbalance in the market that the algorithm could deal price back down to, right? So that's always a possibility. So for me to be interested in taking any long position, any buys, I would need to see us get back above Friday's premium array, right? Right? So once we get back above Friday's premium array, and we would need to get through that aggressively. If we just inch our way up here slowly in the candles or little small candles and we're wicking up there and we get above it, I'm not interested in taking that buy. I want to see strong, aggressive candles through that premium array. That's the algorithm telling me that it's bullish and it's um willingly and it's willing to make a draw on the buy side liquidity and more than likely make a draw on the upper new week opening gap that we have to the upside. But that will be the only way that I am interested in taking a long from where price action is currently at because we just had a movement uh, of 1,500 pills. So we should expect expect some correction, some pullback off of that. Not saying that it's going to give us a good pullback, but we should expect that. So that is the only way I will be um interested in longing from here. So what I'm paying attention now for the rest of Asian markets tonight, going into London markets tonight, and New York markets tomorrow morning is how price action is reacting to this new reopening gap. And I want to see if we push below that and how we push below it. If we push below it aggressively, then I will be looking for us to go ahead and come down and fill in this fair value gap and potentially this fair value gap as well before we make a swing back up to take out buy side liquidity and rush and push up into the upper new week opening gap. However, if throughout the rest of Asian markets tonight and going into London markets, we see price action push up through here aggressively when it get back, when and if it gets back up in here and we see it push through aggressively, then I will be looking to take longs off of these levels, targeting buy side liquidity and the new week opening gap. And that's how this thing goes, guys. There's no predicting these markets. Is just looking for your confluences with the education and knowledge that we have and following and trusting the science, because that's what it is. It's technical science. And so and is operated off of an algorithm. So we are learning how to read the algorithm. That's what we are doing, and that's what we are coming proficient in. So, with that being said, we will look at our currency pairs, and we know that our currency pairs move inversely correlated with the dollar, meaning that they move in the opposite direction. So, looking at Euro USD, we see that we had price to pull way back below the PD array. We were expecting that if we did not break above the buy side liquidity, right? Remember, opposite of what we was expecting for the dollar. If we didn't close below sell side liquidity on the dollar, remember, we was expecting it to keep dropping more. However, if we didn't I'm sorry, we was expecting it to keep going higher if we didn't close below that sell side liquidity on the dollar. So, opposite of that, we were expecting euro to drop lower if we didn't close above buy side liquidity into this PD array, PD array discount array for Friday's candle. So remember, I said when price is pulling back down off of a bullish market, then we're looking for price to pull back down into a discount instead of a premium, right? So we blow right through that premium. We came all the way down to take out last week's sell side liquidity. So as with the dollar, I am looking to see how price reacts throughout the rest of Asian markets and going into London. I would expect for the algorithm to deliver price back up to retest the sell side liquidity that we just here. And then determine what it's going to do from there. We're either going to push aggressively through there, and as a matter of fact, so just to go ahead and Get all that off of there. Show you how you should be marking your charts on a daily basis. Or at least this is how I mark my charts and analyze the markets um, based on what I've learned from my mentor, Michael Otis, and small money concepts. So high, which is today's buy side liquidity. You should start every day off like this. Your candle should be marked like this before the next trading day even starts. You should already have this marked out, just like this. Or at least this is what I do again. And so um buy side liquidity, sell side liquidity. It was a down day, so you would be expecting price to correct or give you a correction or pull back up into the premium of this down movement, up into the PD array, the premium array of this down movement. So this is what I will be expecting the algorithm to do for tomorrow. I will be expecting the algorithm to deliver price back up into the premium array. However, if throughout the rest of tonight we push through today's sell side liquidity aggressively, if if we do that throughout the rest of Asian markets or going into or before London markets or going into London markets in the morning at 2 a.m., if we push through this sell side liquidity by then aggressively, then I will be expecting price to do for the algorithm to do uh what it has no other choice to do but deliver price to lower sell side liquidities. So this sell side liquidity would be next for the algorithm to run. We have imbalance here. So these are the levels that we would be targeting to the downside. Sell side liquidity, fair value gaps here. That's a beautiful fair value gap that we would definitely be targeting daily fair value gap. So simple as that. If that was to occur throughout the rest of Asian and going into London in the morning. However, what I am expecting price to do is to deliver price up into the premium array of today's candle, um, and then show its hand from there, right? Now it may be news um, that gets us up in there. Hold on. Matter of fact, let me check news for tomorrow because we haven't got Corman on the call yet. So she may not check in to do fundamentals with us tonight. I think she's still in her class. But yeah, we got unemployment claims tomorrow. High impacting news, red folder. Medium impacting news as well. Philly Fed manufacturing index, 8:30 a.m. So with knowing that, that may be the catalyst that we need to push us up into that premium array for Euro USD. And then once we get up there, we could see price either respect this level. And if it respects this level, then we know that more than likely it's a high probability that the algorithm is going to deliver price back down to run this sell side liquidity. However, if we get up here and we push through this premium array, then where is price more likely to go? It's more likely to make a run on this buy side liquidity and keep pushing up to fill in, to run higher buy side liquidities and fill in imbalances to the upside of the market. If that makes sense. That makes sense. Drop a one in the chat. So that's what we're basically looking for out of the dollar and out of currencies, because we already know whatever we're looking for out of the dollar, we're going to be looking for the opposite out of currency, more than likely, unless, we're having unless it's, the markets are unbalanced or out of whack or whatnot, which could be caused by something like a black swan event or a crash or high impacting news. So that's why you always want to check your Forex factory calendar before each trading day, and you want to know what kind of news you coming out and what kind of news is coming out and what kind of impact it's going to have on the market. So moving on to our precious metals. Same thing with precious metals. Precious metals move in the opposite direction of the dollar as well. We did not see the pullback. Hold on, let me look at the pound. I didn't even look at the pound. So yeah, we had to pull back in the pound too. It wasn't as steep and deep as euro, but it did run Monday's sell side liquidity. Let me look at NZ. Yeah, it ran. Let's see. Now it didn't run Friday's sell side liquidity. It came down into the PD array. So let me see some. Yeah. Um, we might we might see euro push up hard because I'm seeing the divergence in, well, no, not, I'm sorry, not euro, but we could see NZD continue to push down hard because it's showing divergence versus its counterparts, the pound and euro. So the pound ran Friday sell side liquidity, as you can see, and euro ran um, Friday's sell side liquidity, as you can see. And NZD did. So yeah, I'm definitely interested in seeing how price pulls back now for the pound in GBP USD. And GBP USD is really clean because it's pulling back up to the discount rate that it just broke through. And it's testing it beautiful. Let me see, Euro USD. What was that PD rate that we just broke through? Um, All right. All right. So yeah, yeah, that's beautiful. So yeah, I want to see what we do throughout the rest of Asia and London, how we respect these discount arrays that euro and the pound just broke through. And if we respect that, then that will get us in line with NZD dropping lower to run Friday's sell side liquidity because it's the only one out of the three counterparts that didn't run its Friday sell side liquidity. So drop a one if that makes sense. So we will be expecting NZD USD to drop low and run that Friday sell side liquidity if Euro and GBP USD respects these discount arrays that we just pushed through. So only if then will we be expecting NZD to drop down and run its Friday's um, sell side liquidity, and we would expect the pound and euro to drop lower and continue selling off themselves. So now, moving forward to precious metals, we did not get those pullbacks in silver that we see in currencies. And metals and currencies usually correlate with one another. These markets is all out of whack. This shit is crazy. Um, and gold didn't give us that. I mean, I guess. Let me see. This today's I mean, I guess but it didn't even get close to running Friday's sell side liquidity, and it didn't pull back down into its PD array like the currency pairs did, and neither did silver. So that's scary. Let me look at the dollar one more time. Metal should have definitely gave us some sell off today with this aggressive bullish move in um the dollar. Let me go back to metals. That's crazy. Um Metals spiked up and ran this buy side liquidity right here. Let me see. Go. It spiked up and ran the buy side. Ran up into this one. That's crazy. Yeah, I'm gonna stay away from metals right now. Because I don't know what's going on. With metals. That's crazy. Let me look at currency one more time. Uh, the dollar could be getting ready to give us an aggressive pushback down to this. I think that's that breakaway fair value gap that I marked all the time. I don't think that's I don't think that's the discount rate. Uh, Bottom line was almost on. All right. Oh, yeah. If the dollar gives us an aggressive push because the algorithm wants to deliver price back down to this discount rate, then I can understand why we seeing this bullishness out of metals, and we could that could mean that we're going to see um, an aggressive pullback on currency. And that could be why NZD did push all the way down to run. So yeah, we just gotta wait on the sidelines and see what the price action gives us throughout the rest of Asian markets and going into London, because this markets is definitely crazy right now, especially metals diversion, the way that it's diversion from the dollar right now. That is crazy. So staying away from metals. I'm experienced enough to know that it's okay not to know. So I don't know what's going on with metals right now. I don't. Um, I'm gonna see what Corman got to say fundamentally wise, and that may give us some shed some light on what's going on, give us some insight on this. Looking at oil, look at that. Broke back below this fair value gap that we've been holding forever. So let me see some. Gotta see what we run that sales out. Yeah, we ran that. We ran that. Hey, I don't know what's going on with oil either. Oil usually moves with the dollar. So we all out of whack. I definitely want to see us get back above the $75 level. Of course, that's the level that I've been wanting to see us hold, so we can break back above these equal highs right here that we see up into this fair value gap. But if we come back up into this uh, hourly fair value gap right here, and we respect that, then I'll be looking for the algorithm to price lower, to come down and run lower sell side liquidities and fill in lower imbalances. So that's what I got out of oil. That's what I got for oil. And looking at ES or E-mini S&P 500, um, we see that Monday, I told you guys that I wanted to see, um, I was expecting price to give us a pullback up into Monday's premium array. And we not only pulled back up into it, but we ran Monday's buy side liquidity. And today we pushed back down to retest Tuesday's discount array, right? But we ran Tuesday's sell side liquidity as well today. So we go down to the hour time frame. This is Tuesday's low or Tuesday's sell side liquidity, right? We see we ran that here, ran that sell side liquidity right there. Um, and then for today, we pushed up. We see the market make. You probably can't see it on the hour time frame, but if I break it down to the 5 minute, you see the the market maker buyer model set up. You see so you see the breaker block, the low, the high, the lower low here. You see that broken through. You see that market structure broken through. You see uh, the fair value gap created right there, the breakaway gap. And then we see this fair value gap created right here, after after the breakaway gap that was created right here that broke the market structure to give us the breaker block, because we know a breaker block is when you have a low, a high, and a lower low, and that high is broken. So the candle that broke the high to create the breaker block also was the candle that created the breakaway gap, right? These are all confluences that you are looking for in real time. Now, keep in mind, we're on the 5-minute candle, right? And I can go down to the minute candle. So these algorithmic patterns is happening back to back to back really fast. So you either got to have your levels set in certain areas of confluence that you've already predetermined, or most of the time, us day traders, we're in front of the charts on the chart in real time, taking trades in real time. So once we see that low, that high, we're on the minute. I mean to go to the minute. I mean to the minute. So once we see that low, high, lower low form right here, and we see the break of that market structure right here, right? Market structure break right there, right? Fair value gap created, and we see price come back down into that fair value gap and run away. That created our breaker block, low, high, lower low. We see it broken right here, right? So with this pull back down into this breaker block, back down into that high, that is where you're going to be looking to take your buy off of that high of that breaker block, that low, that high, that lower low. Once you see that high broken through, you're going to be waiting for price to pull back to that breaker block, to that high, and you're going to take your buy off of the high of that breaker block. And you're going to be targeting buy side liquidity or areas of fair value gaps to the buy side, to the upside, or new week opening gaps or new week daily gaps to the upside. Basically, you're going to be targeting areas of liquidity to the upside, and vice versa when you're in a sale. So drop a 1 if that makes sense. So if I go back to and um the 5-minute chart is, in my opinion, the best chart for spotting breakaway gaps. Um, so we see the breakaway gap form here. When this candle breaks this market structure, right? We got our low here, our high, and our lower low. This candle breaks that market structure and breaks that high. that creates the breaker block. That is what makes that a breaker block. Just because you see a low, a high, and a lower low, that doesn't make that a breaker block. It's not a breaker block until it's broken. That's what makes it a breaker block. When price breaks through it, when price breaks that high, then it's a breaker block. Now, your other confluences have to match up as well. We have to be coming off of a deep sell market, running sell side liquidity, right? Seeing sell side liquidity on rent, which is this low right here, and then seeing a lower low form, which gives you your turtle soup. Then we look for the reversal. The breaker block is literally the smart money reversal. That's how you know we're about to reverse once you see that breaker block form after coming off of a deep sell off and seeing sell side liquidity rent on a higher time frame. So on your 15-minute or your hour time frame, when you're looking at price like we are on the 5-minute right now. So once you see that sell side liquidity rent on the 15-minute or hour, then you look for that lower low to form, which is your turtle soup, which is the fake out for the early buy. Because most retail traders are buying as soon as they see sell side liquidity rent, because they're looking at that as a level to I'm sorry, most yeah, well, somewhat experienced retail traders, they're buying as soon as they see sell side liquidity rent. And that's why you will almost always see the algorithm make price deliver a lower low after running sell side liquidity. So we see sell side liquidity rent here, and then we see this low form, but then we see a lower low form. That's because you had early buyers right here that was buying, and they set their stop loss right below where they buy from, because that's what retail traders are taught to do. Set your stop loss right below your entry. And the algorithm run those stop losses with this lower low here. And then it starts to deliver price higher and higher from this level. And you will see that reversal always form in the form of an order block, which is that low, high, lower low, and breakthrough. Then once we see that breakthrough, if you see a breaker, if you see a breakaway gap was formed in the midst of that breaker block being created, that's a 99.9% chance that price is gonna give you what you want off of that level. That price is gonna buy off of that level. Now, sometimes you don't have a breakaway block, a breakaway gap. Sometimes it's just a regular fair value gap. That is a good probability too. However, for me, I like to see the breakaway gaps, because that is very high probability that price is going to break away. So drop a one if all this is making sense. So that's what we got for ES moving forward for the week. I want to see how, matter of fact, let me see. Yeah. So we just pushed up off of this. Is that a new reopening gap? No, I think that is a daily um fair value gap. Let me see exactly what it is. Yeah, that's a daily fair value gap right here. So, which is very powerful. Um, and we just pushed up off of that aggressive. So I'm definitely looking for the algorithm to go ahead and deliver price up to this new opening gap, because that's what this is right here, these two levels. Um, and then I want to see how we react to these levels. If we aggressively push through it, then we're going to be targeting this buy side liquidity off of these levels right here, which is, we know the mentor says we should be targeting 5, or you should be targeting 5 handles. But as you can see, this is an easy 20 handles. Um, so yeah, that's what we'll be looking for if we push through it. If we respect it, then we will be looking for price to come back down and retest this market structure that we created on top of this fair value gap. So it's as simple as that. And looking at Dow futures or US 30, looking at the daily, same thing. Same thing. Hold on. We haven't pushed through. Oh, those are okay. Hold on. All right. So, yeah, we see U30 is currently inside of our PD array from um today's down day, down candle that we had today. Um, so yeah, we want to just see how price reacts to this PD level, this premium array level throughout the rest of Asian markets and going into London. Um, it's in the, yes, sir. Yes, sir. What do we got inside of that PD array, y'all? Fair value gap. Look at that. I'm telling you, when it line up like that, it's a beautiful thing. So we just want to see how price action reacts to this level, PD array and fair value gap. If we continue to push through it aggressively, then that's indication that the algorithm wants to keep delivering price to buy side liquidity. Um, and that's what it will do. I'm sorry, y'all. I just this the way my mentor do it, and I like the way it look when it's perfect. So I'm sorry. I just had to get it perfect. All right. So um if we push below the the premium array, of course, then we'll be looking to come back down, retest market structure, and possibly run sell side liquidity. However, if we continue to push through here aggressively like we currently are, then we will be looking to take long positions off of these levels, targeting buy side liquidity and higher levels of buy side liquidity and that value gap imbalances in the market. So that's what we got for futures. Pretty much same thing with NASDAQ. Um, yeah, pretty much same thing with NASDAQ. You guys know I'm not a big fan of NASDAQ, but if you trade it and want me to look at it, I will drop it in the chat. Other than that, I will wrap it up by looking at last but not least cryptocurrencies. We are back up to our level of 25,200. So now we just want to see if we break back below current level that we're currently in. If we do break below that level aggressively, then I'll be looking for us to come on down into this fair value gap. And then I will see how price reacts to there. However, if we hold this level and get back above 25,200, y'all already know where we going. 29,900, preferably 30,000, the big bigger number, big round number. Same thing with Ethereum. Same thing with Ethereum. And it looks like we could be, yeah, suiting up to push down to this level here, market structure. Let me get this in. Um, yeah, because I don't even want that. We already violated that most. Get that up out of there. All right. So yeah, we'll be looking to come down into this fair value gap, guys, which looks like we are, unless we will, of course, push back up through, and the body of this candle becomes a wick. But currently, it's looking like we want to, the algorithm wants to um, deal price action back down into this fair value gap. So we'll just pay attention to that. And you already know if we come back down into here, we'll be looking to add to our crypto positions because we dollar cost average in, meaning we take crypto out of the markets at swing highs. Can you guys still hear me? Okay. I think I went out. I was talking about dollar cost averaging. So yeah, we dollar cost average in with crypto, meaning we take crypto out of the markets at swing highs and we buy back in at swing lows because we know that crypto is a long-term gain. Long-term gain. Um, yeah, same thing with ApeCoin. Um, let's see if we respect this with ApeCoin, this level here, this little mini market structure that we have. If we do, then we can push back up to the upside market structure we have up here. But if not, if we push through this, then we'll be coming back down to retest this monthly structure. And that'll do it for the midweek technical analysis, ladies and gentlemen. Corman will give us the midweek fundamental analysis later on. She couldn't make it tonight. So now I will stop my share, stop the recording, and take any questions.